We are less than 24 hours away from hearing what the Federal Reserve will do. Well, look, we expect that they might not hike rates, but we're more interested in what the projection is for the U.S. economy. Either way, we don't want you to have to wait around to decide what to do with your money. Should you buy or sell stocks? Let's bring in Michael Binger. He's Gradient Investment Senior Portfolio Manager, $1 billion under assets. Are you a buy or sell guy right now with the markets?
You know, right now we're a sell, and when I say sell, I mean trim. I think some soft economic data recently, the fact that we're going to get a rate increase at least by December, if not maybe a surprise tomorrow, we'll see. You know, markets are kind of a rich valuation. We could see a little 5 to 10% pullback, but at that point, you got to be ready to jump in because 2017 is going to be a good year.
Oh, that's good to know. Okay, when it hits and there is that point to jump in, what do you scoop up?
Well, I'll tell you what, I really like General Motors right now. I think it's a great dividend stock. It pays almost 5% on a dividend yield in and of itself without any price return. The company's doing well. It is a cyclical stock, but their financials are really good right now. You got that great dividend. It's just way too cheap for where they are in the cycle.
You know, I noticed yesterday it was up about 2.5% because it got an upgrade to overweight from Morgan Stanley. But looking at the overall atmosphere at the moment, I hate the fact that we're all wondering which Fed head said what. You know, you had Bill Dudley, you had Mr. Lockhart, all kinds of things, and then Lyle Brainerd, who's really kind of squashed all of it. Should investors just tune out what the Fed says? We don't want them to tune out to us, but tune out what the Fed says on a day-to-day basis.
Well, when you think about it, I think you should, because we're going to get another rate in 2016. If it's September or if it's December, does it really matter? And it's only a quarter of a point, and we're still at such low rates that I don't think 25 bips is going to make that big a difference. I think what people need to focus on more is an economy that gets a little better and earnings that get better. I mean, earnings have been a little punk. We expect that to reverse, and that's what's really going to drive stock prices, not what the Fed does or does not do, and when or when they do not do it.
Michael Binger, earnings have been punk. I like that. Michael's with Gradient. Good to see you.